3rd September 2025, in the 56th GST Council, major changes were announced to India's indirect taxation system. Yes, India's indirect tax, that is the GST system of India. The goods and services tax has had a major overhaul in this current meeting. And the biggest and most interesting GST rate cuts, that is a taxation cuts, you would have already seen in your WhatsApp groups. Tax on automobiles, tax on bikes, even that on ACs have been heavily cut. That means the consumption in the country is going to increase, and for you and I, the cost, the tax that we pay to the government is going to decrease. And till here, I'm sure most of you would know what I'm talking about, because in newspapers, in your WhatsApp groups, over across, even on Instagram and YouTube, I'm sure a lot of videos would have been consumed by you on the GST rate updates. But here we are going to talk about the impact on the stock market. Now quickly, let's talk about the bet that the government is taking. They are hoping that by cutting the GST and the taxation rates across a lot of major categories in the country, like including household essentials and even electronic appliances and automobiles, they are expecting that the consumption in the country is going to increase. That means people are going to spend more. When they spend more, what happens? Companies earn more money, and when companies earn more money, they will hire more people, they will start expanding, and when they are expanding, their sales will grow, and eventually the stock market and the stocks in it would also be very likely to grow. And now I've created a curated list of 15 interesting stocks that I'm personally excited about, and I want to share that with you. That is the agenda of this video. These stocks are from multiple different sectors, and we'll go through all of them one by one. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So before we start the video, I hope that personally all of you have gone through the image that was shared on your WhatsApp group regarding what are the major GST changes. I also will be attaching this doc in the pinned comment and in the description. This is the official government PDF that they've shared, highlighting which all industries will be seeing what all rate cuts. So you can see that there are different sectors being talked about here, and they clearly say what is the old GST rate and what is going to be the new GST rate. So if you're not already gone through this doc, make sure you do the same. And before we go through all of the stocks, I want to remind you that this video is not investment advice. I'm personally interested and studying these stocks. If you're also interested in studying the stocks, you can join in and watch the rest of the video. So the first category that I personally found a lot of excitement in is the hotel category. So if you looked at the hotel GST rate, you can see that earlier hotel stays up to 7,500 rupees per day was being taxed at 12% GST. That has been brought down to 5% GST. So what is a major thing that you have to understand here? All the luxury hotel chains will be out of the equation because they still fall under the higher per day room rent category. So only the smaller hotel chains is what you should be looking out for. One such category here is Lemon Tree. So Lemon Tree is a stock which has been performing really well over the last multiple years, and you can see that now it is in a breakout zone. So one more thing to highlight here, because all of these news, few of the stocks would already have given a breakout. It does not mean you have to immediately go and buy these stocks. This is more like a long-term view. This GST update is not for 3 months, it's not for 6 months, it's for all the years going ahead. So it will be changing the direction of the entire economy and the companies inside our country, not just for a few years, but for the foreseeable future. So you have to look at it from that perspective. Don't immediately jump in and start investing into any of these stocks. Look out for major levels or major support levels, retracements in the stocks, and try to pick it up at a good price. That is one general advice that I can give you here. So one of the stocks here is Lemon Tree. So we can go through their screener listing as well, see how the company is performing. The stock PE ratio is slightly on the higher side with a market cap of more than 13,000 crores. But one thing that I want to highlight here, if you're looking at the growth of the company, it has been consistent. So in the year 2016, the company made 368 crores in sales and was losing money. It was a smaller company. Hotels and infrastructure like this obviously require huge investments. But now looking at the current year, you can see that March 2025, they ended at more than 1,286 crore rupees in revenue. and the profit number has also grown to 243 crore rupees. And you can see over the 3-year period, their profit is growing at 62%, their sales growth is 47%, and that is why they're demanding a higher PE ratio, right? Because of the fast growing nature of the business itself. Now we can see after wild fluctuations, starting from the December quarter, the FIs are showing slightly higher interest in the stock, right? So earlier it was at 27%, then it dropped sharply. Now it's slightly growing back again. So in my view, this is a good stock for you to watch and study for deeply before you decide to invest. Make sure you do that study really well. Okay, the next category I found exciting is the farm and tractor segment. So here I have few stocks in my list. So the first one is Balkrishna Industries. This is a tire company and they majorly make tires for the tractors. If you have not already seen it, tractor tires GST has went down from 18% to 5%. The stock had given a slight reaction, but you can see that overall it is still at a much lower price from its all-time high, nearly 30-35% down from its all-time high. And when you're looking into the company performance, you can see that it's a huge company. They even advertise in the IPL with their logo as BKT. That's you have probably seen the stock, right? And in the profit and loss statement, you can see that they're a growing company, but not so fast, right? So this company has struggled with growth over the last 3 years. You can see that sales growth has only been 8% over the last 3 years and profit growth has been only 2%. That is CAGR number, that is 2% growth every single year. That's not enough, right? So when you're looking at the farm segment, I think this company is still preferred by a lot of farmers for changing the tires in their tractors. And when with this new boost that is coming in starting from September 22nd, I think it will have a very, very positive impact on the tractor tire segment, which BKT is a huge part of. Nearly 30% of the company's revenue comes from India, and if you're able to see a good increase there, they can reinvest and become more stronger in the international market, where 70% of their business comes from, and that is what is personally exciting for me. Now going into the next stock very, very quickly, it is obviously Mahindra. They also make tractors, but then because they're also an automobile company, you can combine it, right? So Mahindra as a stock, yes, it has gone up too much. That is why I'm still waiting, not so interested in the current prices here, but I'm sure there will be a slight retracement, and that is what I'm waiting for here. No need for me to open Mahindra and explain it for you. All of you are currently seeing the growth of the company, and I'm sure all of you already have it in your watch list. So let's go ahead into the next stocks. Again, this stock's name is Escorts. They are a tractor manufacturing company. All they do is manufacture tractors. And as you have seen, the tractors, GST on tractors has also gone down to 5%. Again, farm and farming equipment, there has been a heavy GST rate cut, and I'm sure this company will be positively impacted over the long term. So you can see that the company's stock is at a decent price now. It decided, or it tried to jump up the last day, but then it came back down at its natural prices over the last multiple weeks. You can see that it is still down nearly 17% from its all-time high. Let's quickly go over its performance report. So you can see again, it's a large company, more than 40,000 crores in market cap with a stock PE of 35.4. The company has been steadily increasing its profits over the last 3 years, nearly 20% CAGR growth. Over 5 years also, it has maintained the same. Even the sales growth has not been that strong, but I think with the GST rate cuts on tractors, I think this will become more interesting for the company, and definitely it is one that you should be watching out for. So next is the automobile sector. I know we already talked about Mahindra and Mahindra, but there are two other stocks that you should be interested and excited about. One is Maruti. Again, all the auto sector stocks, they were the first ones to rally. In fact, they started rallying based on rumors alone. Even before the government announced the GST rate cuts, there were rumors that automobile GST will be reduced, and Maruti, you can see Hyundai, all of them decided to jump up early itself. So again, I think they will be very, very positively impacted, not just in the short term. You don't have to worry about the short term price jump in the stocks, again, as I said, but over the very long term, these are very, very exciting companies for me. Again, I'm sure as India grows, now there is larger potential for people to start spending more money in India and its economy. these are sort of the only companies that you can go after, right? So if you're in the market to buy, let's say, a car, you have to go through either a Mahindra, a Tata Motors, a Hyundai, or even a Maruti. You don't have any small startups which come and easily make cars because the investment there is huge. So when the country starts growing, I'm sure these investment heavy companies, they will be sort of having a moat. The moat is that no other new player can easily come and play in this market. That is their moat. Even when comparing to e-scooters, the revolution that Ather Energy and Ola brought in, these companies are much more well protected against new entrants into the market. That is why I'm personally excited about it. On another side, TVS Motors, another stock, it has also rallied up, so be careful. But this stock also, for all of its glory, for all of its good things to say, they're improving their EV segment and their vehicles there. And you can see that with the rate cuts in the automobile sector, what has the GST gone from? To 28% GST in vehicles under 350cc, it has gone down to 18%. From 28 to 18%, that is significant. And also to highlight, when the GST reduces, the ex-showroom price of all these vehicles reduce and the road tax component also decreases. So I'm pretty sure that all of you would have all these companies under your radar. So let's move ahead into the next interesting segment, which is, for me, cement. So cement is the backbone of any modern economy. In fact, just like steel and energy, you can look at the cement consumption of any country and try to predict how much it will grow over the coming years. So just like that, cement is very crucial for not just India, any country across the world. And one company that I'm personally interested in this segment, which is still available at a reasonable valuation, in my personal opinion, is ACC Limited. So ACC Limited has been flying under the radar for a long time. So you can see that the market cap of 35,500 crores and a stock P of 14.8. And what is interesting here, the company is almost debt free. And who is it being owned by now? It is being owned by the Adani Group. So I don't have to come out and give any statements there. But I'm personally bullish, even though it is one of the smaller cement companies in India right now. You can see that Ultratech Cement is 10 times as big as ACC in terms of market cap. I think they've been steadily growing their profit and loss statement over the last multiple years. And you can see today they are making a sales of 21,000 crores with a profit of nearly 2,500 crores. That has been steadily increasing over the last multiple years. So because of the Adani Group's involvement in the stock, I am personally bullish because it's a good company. It has good track record and now it's being owned by Adani, who can pump in a lot more money there. The risk is that it is owned by Adani because a lot of investors are trying to stay away from Adani companies. If you're not interested in that, you can avoid the stock. But personally, I'm looking at the stock and seeing a decent company here. Before you take any investment decisions, make sure you go ahead and study it in depth. Now going into the next segment, which is FMCG. Now one major stock that I'm personally interested in is Hindustan Unilever. It has been underperforming for a long time, and with the GST rate cuts on household products, I'm sure that this stock will go ahead and be in focus over the next few years. I'm personally excited about it. And yes, there are multiple stocks in the FMCG arena. In fact, I'm also personally heavily invested in the FMCG index funds, right? But I'm personally excited about this particular stock because I think the company itself comes with an international pedigree and international experience. And I'm sure they've faced many downturns, not just in India, but across the world. And they've strongly become one of the major market leaders in almost every single country that they're selling in. So I think it's personally a very interesting company. That it is backed by the multinational Unilever Group, I think makes it even more exciting. The next two stocks that I'm personally watching out for are Voltas and Blue Star. So when you're looking at the stocks, you can see that the company has not been performing, right? It is more than 30% down. And even with the recent GST rate cuts like Maruti, like M&M, these stocks are not flying up. What is the reason here? The reason is that this time across the country, the summer has been very, very short. In fact, wherever you're living, make sure you comment down below. What is the summer like for you in your city? I am sure it is shorter and better, not that hot compared to the last year. That means the AC sales across the country are down. It is not a good season for them. But the hypothesis here is that over the long term, yes, global warming is real and cities across the country will start getting more hotter. So these companies, that is Voltas and Blue Star Co., I'm personally interested in them. I know they're not having a good time. That means their valuations are still a bit digestible compared to other industries like automobiles, which have started shooting up already. So when we are talking about ACs, I want to talk about finance as well. So when we are talking about ACs, my next talk is finance. So as all of you know, most of the Indians purchase ACs, especially big purchases, are done in EMI. And when I talk about EMI, especially for ACs, which is the first company that comes to your mind, at least for me, it is Bajaj Finance. So when you're looking at the stock, you can see that this company is having a breakout because of all the consumer durable GST being cut. So I'm personally interested in Bajaj Finance, and in fact, you should be having a diversified portfolio of a lot of finance stocks. I wanted to give you that here. So Bank Bees also is an interesting stock that you can watch out for. It is basically an ETF, exchange traded fund, which is representing Bank Nifty. So when we talked about all these sectors, when we said the companies will grow, the sectors will grow, the country will grow, who is going to fund all of this? It is a banking sector. So along with Bajaj Finance and such EMI giving stocks, I want you to also focus on a broad bank base or a larger theme, which is banking. When you're deciding to invest, make sure you study that well before you take any decision. So the next stock that I'm looking out for is Trend Limited. So you know that they're the owners of Zudio, and you can see that the rate cut there has also been massive, from 12% to 5% for any clothing or footwear which is priced below 2,500 rupees. And I think they're one of the most dominant players in that category, especially below 2,500 rupees. The stock has not been performing well because the expectations with Trend had been huge. So you can see that it is trading at a PE of 116. And the question when you're trading with such a high PE ratio is that can you show growth in the market? So you can see that over the last multiple quarters, the company is not able to grow that much. June has been an exception. It has grown quite well compared to last year, nearly a 20% increase. And if you personally believe in this theme that the GST rate cut is going to enable a lot more people to purchase better, but over 2,500 the purchase is going to reduce, then you can definitely be interested in the stock. But I would say with the high PE, it is not a very easy bet to take on. Make sure you're giving it a very small weightage, even if you're deciding to go ahead with investing. The next stock is also interesting, but a slightly risky one in my opinion. It is Avenue Supermarkets, or our own DMart. So we have analyzed DMart and its annual statements a lot in this channel across our A to Z series, and you can see that the company has not been having a good time over the last 4 years. It is still down by more than 22% compared to its 2021 levels, and the major reason for it is the expansion and the new category, which is quick commerce. A lot of sales is getting leaked into the quick commerce segment. So the theory here is simple. When the GST is cut across many categories, especially for household food items, all supermarkets will also do well. That is the theory here. And if you're interested, you can go ahead and look into the stock. But the fact that they're struggling to grow makes it a slight concerning factor. So even though the theory is good and even though the company is growing, you can see that over the last 3 years, they've grown at a CAGR of 24% in sales and 22% in profit. But their stock price not moving and their stock PE being more than 100 makes it a slightly difficult bet. So again, make sure you do your own analysis, and before investing, make sure you're concerned about the valuation as well. Yes, so those are personally the 15 stocks in the Indian market that I'm personally interested in. I know there are a lot more stocks, especially in the small cap and micro cap category, but I am personally not interested in any of them. These are the stocks and categories that I am excited about. But if you're interested in any of the stocks or any of the categories, make sure you let me know in the comments down below. For example, some people might be really interested in insurance because the GST there on insurance has gone down from 18% to 0% on life insurance and health insurance. So you can also look at those companies, and if you're interested, you can let me know in the comments down below. So as always, hope you liked the video. Make sure you hit the like button if you did. This is Ajay Ajith signing off. See you all again with another video. Bye bye.